Welcome, and thanks for joining us today as we recap the August WASDE. A lot of changes today, some surprising changes, maybe in line with maybe some of the market expectations, but some pretty big numbers tossed out there today. I'm joined by Mark Talaski and Brian Basting as we digest the report. Corn was down at last look, new crop down 14, beans up 14 to 15, and wheat was down about a dime. SRW 7 to 8 cents, and HRW and 1 to 2 across the spring. So, Mark, let's dive into it. A lot of changes. Corn balance sheet specifically, bump in acres, record yield change from July to August WASDE, record yield printed, handful of states. I think you quoted 8 out of the top 20 something, 11 maybe major growing states, record yields. So let's start with what goes into the August yield. How do they come up with the number?
What I read this morning was it's farm survey based.
So they continue
satellite imagery and then some yield modeling. So if you look at their conditions that they've been penciling every week, it's hard to.
Not a big surprise.
To see an increase. It's to see a good yield.
But the jump we saw today,
that was a big one. I mean, I think the biggest surprise might have been the acre adjustment of 2 million acres. I don't think that was. I mean, I think we could have probably palleted a 188 yield, even though that's still big.
Right.
I think the trade was 185-ish, even though I think the average guess was 183, 184. But I think the trade was in the 185 camp for a while. So I don't know if that was really the surprise. But if you go from July to August, we're up a billion bushels. We have a billion bushels more corn than we thought we did a month ago.
16.7 billion bushels of corn production in the U.S.
Yeah, and we just said the record prior to this was 23 at 15.3.
Massive.
So it's a big number. So, so then they take that and they dive into their balance sheet and they make some adjustments on the demand side that I think a lot of people were probably questioning their demand coming into this report.
Agree.
And now we're up in demand was a 545. They took up demand in this report, and it's almost like they had to back into a palatable carryout number.
At first glance, I agree. It feels totally kind of throwing stuff at a wall. So let's break it down a little bit. The conditions ratings, as you noted, market was anticipating an increase, and I think some of our weather modeling. There was plenty in the trade that were towards above a 185, let's call it. Maybe that was the sweet spot. I think the high end of the range was a 189 from the analysts' estimates, and it came in at a 188.8. So near the high end. The acre change, they incorporated the FSA data. So while we expected, comments out of Iowa, I think we got more corn acres. Guys planted a lot of corn this year, not a huge surprise. But that combo of the yield and the acre increase to give us that billion bushels, what do we do with it? And so you break down this demand, like you said, they increased ethanol. What was it? Took
ethanol 100
up on ethanol. Probably has its own challenges, just given blending economics and gasoline demand. But we're going to potentially see an increase there. Feed up 250 or so, exports up 200 versus maybe what was the higher end of some trade estimates on exports anyway.
Yeah, their export number for next year is larger than the one they have this year.
It's a record 2.8. Is that an all-time record, or it's got to be pretty close?
Record. Yeah.
So plenty of challenges ahead, and I think that maybe the takeaway from the absolute number on the yield today is we're going to see a lot of crop tours and boots in the field checks start to come over the next couple of weeks. And maybe we do find a little bit of a different opinion of what that final crop is. I've got a couple privates that have been checking some fields, and we've all heard the comments on the pollination issues and maybe a little bit of disease pressure here late. So this might be the higher end of what we see from a production outlook for the USDA. But at the end of the day, there's probably a little wiggle room in the demand too. So it's hard not to come away from this report with more of a bearish tone that I think the market was already kind of implied. The challenge, I think, will be, what do we see in that export picture? Can we be price competitive? They didn't make any adjustments on the Brazil crop, correct? So they left Brazil unchanged at a 132. A lot of in the trade, I think, are 140 plus on that. Doesn't necessarily mean that that's going to flow into the export channel, given their increase in domestic demand. I think there's some challenges ahead. Net year over year global feed demand, I think, was up 25 plus or minus million metric ton, which we've seen increases year over year in that when we've come off of high prices. But the global competition feels a lot different than what we saw last year. We got a better Ukraine crop. We've got the Brazil crop that obviously the USDA didn't adjust today, but we feel like it's a little bit bigger. So it doesn't feel like it's that same kind of captive demand maybe we had in this last marketing year, where we realized ultimately the USDA bumped our current marketing year exports up 70 million bushels. So a 2820 for the marketing year that wraps up here at the end of August. And that's an impressive number, but we had a really competitive advantage for probably close to 6 months of the marketing year, if not maybe a little bit more.
That old crop carryout number just got lost in the weeds today.
Yes,
I mean,
good point.
It's
A
down 35 million and 1.3 carryout, and it just
sure didn't feel like it.
It just
Current
wasn't
prices.
even a thought. It wasn't even a consideration as part of the market. I did do a little looking actually. When the USDA comes in above, back to the yield statement, above the trade range,
Okay.
or at the high end of the trade range is in this, as they do in August. Since 2019, there's been 4 years where they've kind of done that. Well above, in fact.
Sure.
All of those years, the yield actually was lower in the final.
So you heard it here first, folks.
Yeah, there you go.
There is hope. It's a 179. No, just kidding.
But I mean, it does feel like, I mean, I know there's people talking 190. I guess you can't roll it out today, but I guess we got to prove it. Weather's got to prove it. There's still another month and a half of really important weather to kind of finish this crop out to get that finish line. So, not to suggest the yield's going to go down, but that's the test now.
Yeah, and I don't want to, try to outguess the market move, but for the numbers printed today, I keep going back to historically. That sure feels like it would have been a limit down type environment 10 years ago. And it feels like maybe the market, just to the tune of what we're saying right now, is maybe not buying that fact that it's
and maybe the old crop carryout did kind of
limit that downside. Good point. A lot to be determined here as we go forward, adding some volatility to the mix here with a fun August WASDE on the corn, highlighting the production outlook maybe as anticipated, and ongoing challenges to the demand as we roll forward here. Jump for a minute over to wheat. Brian, a little less exciting on the wheat balance sheets. Hate to throw that on your lap, but you're the wheat guy. Did we see any big changes in the U.S. or world numbers? Spring wheat maybe down a little bit. Mm-hmm. Why don't you run through those for us?
Yeah, we did see a slight reduction, Nate, in the spring wheat crop. They took the yield down in North Dakota from 59 bushels, which was last year's record.
Right.
They had this year's record penciled in for July. They took that down to 55 this month. So that was trimmed down along with a little bit of a reduction in Minnesota, I believe. Took it down 20 million bushel HRS crop from what it was in July, from 469 to 449. A little bit of an increase on the other end of the spectrum for the winter wheat crop, particularly the HRW. They took the HRW crop up to 769 this month. That was up about 10 or 15, I think, from last month. And the SRW is up 2 million from last month. So those harvests are pretty well wound down for winter wheat. Spring wheat, obviously, we're just getting into the harvest now. We'll see. They will not have another update on spring wheat harvest, Nate, until the end of September.
Okay.
September 30th.
Small grains.
It's a small grain summary. So we don't get a September update with the corn and beans like we do on September 12th. We have to wait till the end of September. Spring wheat harvest will be done by then, of course, since we have a real good idea of what the crop was. But probably the biggest change, Nate, we saw was on the demand side. They did increase exports, 25 million bushel here for the U.S. It's not a robust program at 875, but it's a stronger program than we thought maybe 6 months ago. HRW is off to a great start. That's where all the increase was seen, HRW, up to 300 now for the USDA. It was 218 last year. So we're up a big chunk from last year for HRW. The challenge moving forward after this Q1 bump, if you will, what happens in the Southern Hemisphere? Those are the direct competitors with HRW from, I would say, definitely from December 1 and January 1 on.
Okay.
So we may squeeze out half of the second quarter or 2/3 of the second quarter with a strong HRW program. But if Argentina comes through with a 20 million ton crop and Australia raises 30 to 32, I think that's going to be the the end of the real bullish increase in HRW. Having said that, those crops are not made down there, Nate, as we speak here in the middle of August. It's critical time for August and September, and even into October for Argentina. So that'll be the next big variable to watch. Other than that, Nate, not a lot of changes on the balance sheet for wheat, other than just saying we're off to a good export start, but it's a race to the bottom for corn and wheat, beg your pardon.
Yeah,
Who can get into
those together?
Who can get into the feeding ration?
Yeah.
Who can get there quickest? And right now, it's neck and neck, and they're both just pushing each other to the downside.
Yeah, it really feels like a scenario where to achieve some of these export totals on corn and wheat, we've got to buy that demand. And unfortunately, that's not usually a very bullish scenario for the producer, at least looking at it today for the numbers that we're seeing. Maybe jump back a minute to the corn side, Mark. I think we talked about in depth the bearishness of the report today, and maybe the market's hesitant to buy that demand and everything that was penciled today. So how do you see the producer and the commercial elevator going into this fall? I mean, what would, on one hand, it's maybe an optimistic demand, but if realize, that's a pretty big, to achieve a 2.8 corn export, we got to have a pretty strong Q1, Q2, Q3, Q4 corn demand. So you can make an argument that, if we do realize some of this demand, there's some basis opportunities, but it feels like maybe accounting for the big crop and what we're going to see maybe with the struggles on space, especially in the Western Corn Belt, that it could still get a little cheaper with some wider spreads as we go forward.
Yeah, so I think you hit it spot on. I think the challenge is going to be front end loaded for us just to kind of handle this crop. If it's truly this big, then we got to kind of get through, figure out, does the producer sell it? If we have that kind of demand, we're going to need 28% of the crop sold in the first quarter or something like that.
Mm-hmm.
And at these prices, I don't think he's overly incentivized to do anything. So it's going to get tricky to get enough corn into the pipeline if that demand's truly that big going into the front end, and then handling this crop. And, storage rates are going to be high, but I think you can see a very cheap front end basis. And if the farmer is a very stubborn seller,
maybe some direct payments, maybe some other variables in play there.
This thing comes with a little bit of a slingshot, and all of a sudden the basis and the spreads have to do a little bit of the heavy lifting to kind of incentivize the movement going forward. So that's going to be the spot we're going to watch, and then obviously how South America starts up their crop.
Right, not really accounting for what still their current crop production outlook could be. Brian, if you're talking to a producer today and seeing this, and maybe we've noted that, okay, this might be the biggest production we see, et cetera. Feels like the producer's still pretty undersold versus average across space. What advice do you give to a producer today, post-August WASDE, big yield, maybe arguing that, it's too high, but the expectations, I think, were in line with the trade, right? See the bigger yield, see the bigger production. Now we got to eat through that. And it feels like the upside is more limited today than maybe what it was, even if we adjust that acre or that yield going forward. So do you kind of sit on your hands and wait to see if there's a better trade deal, if we're able to buy that demand at cheap prices? Or what do you look at going into fall here as a producer as you start to get the combine rolling in the next 30, 45 days?
You probably have to separate it out, Nate. Those who have been working on the put option strategy, have been managing those puts all along. What I'd encourage those folks to do is continue to manage those options, avoid price prediction, because you're going to be hearing people say, this market has another 50 cents downside. You're going to be other people say, this is the largest crop production report we'll see.
Bottoms in.
Avoid that and just manage these markets. And that's the best advice that I can give someone with the option positions in place, whether you've got short dated options or whether you've got now your traditional December puts on, or maybe a deferred put. Manage those positions, avoid price prediction, and let the market do the work, but avoid price prediction and say, I'm going to let this market do what it wants to do, but I'm covered on the downside. Obviously, those who don't have that type of protection, you're looking at crop insurance as another avenue, obviously, depending on what coverage they have, whether it's 85%, 80%, whatever the case may be.
Yep.
There is some backstop there with one big asterisk, Nate. That crop insurance base price that you've got an 85% coverage on, which is roughly $4 December futures. We're below $4 today. The risk is that you say, well, I'm covered because I've got $4. You're covered up to your APH. What USDA just told us today is we could blow by those APH
Yeah.
numbers. What I'd encourage producers to remember, Nate, is that those bushels that are above your APH, I'll throw out a rough number, say your APH is 210 and you raise 250, those extra 40 bushels, how are you going to protect those?
Yeah.
And I would encourage producers to work closely with a trusted risk management advisor to get some positions in place covering, particularly if you can walk out in your field and you say, do some quick yield checks and say, I've got a really good crop coming on. That's the big risk with crop insurance, Nate, is if we produce above our APH, those bushels simply aren't covered. So those are I guess the paths I would recommend to producers at the moment.
Option volatility is cheap too.
Very cheap, and probably increased with a little skew on it today. But ultimately, I oversimplify it in my mind. I think that what producers are kind of waiting, or we're maybe hanging on to either a trade deal or somebody having that problem, that classic, just for a story. As we were going down to one of our outlooks, I think some producers were calling a customer after that windstorm derecho type stuff came in 2 weeks ago and saying, market didn't react very much to that. Was there a lot of damage? And there were some pockets, but nothing widespread. But it's kind of that hope that, given the USDA's numbers today and those record states, Minnesota, South Dakota, Iowa, Missouri, Illinois, Wisconsin, Indiana, Michigan, Tennessee, whatever, nobody has an issue right now. And so some of those dynamics that we see develop through the marketing year that maybe favor the basis opportunities, outside of just, at some point the market has to buy away from this carry. Once we get through that front end, we just aren't going to see, at least it feels today, some of those regional pulls that we've seen the last couple of years. So in my mind, that does limit some of the basis upside, because I've heard a lot of producers say, well, I don't want to sell these cheap fall basis values. Well, it may not have to get a lot better than that.
That's right.
Net of your storage cost and your other service fees
That's
that
right.
are likely going to increase in this type of market environment.
One thing I'd add, Nate, there too, is that just to remind producers to avoid at all costs painting yourself into a corner with a strategy, trying to say, I've got to do something now because I didn't do enough earlier, so on and so forth. Really maintain your maximum flexibility. Something will change down the road.
Yep.
We don't know what this final yield will be in the U.S. We don't know what's going to happen in South America 3 months, 6 months from now. We don't know what's going to happen with the trade deal tomorrow, as you said earlier. So I really encourage producers to work closely with your trusted risk management advisor to avoid painting yourself into a corner with a strategy. Keep it straightforward, keep it conservative, give yourself upside, but put a floor in there. But there may be some strategies start to be floated here that, well, the price is so low, it's like, that's a recipe for disaster. Yeah. Something will change.
Yeah,
we don't know when or what it'll be, but stick to the game plan, stick to working with somebody you trust.
Shifting a little bit, we kind of hit the bearish commodities on the front end, the corn and wheat. Now to the bean side. Mm-hmm. Mark, similar dynamic on some pretty big changes. We saw the reduction in acres on beans with the offset to the corn increase. Pretty impressive bean yield following the corn side, which wasn't a big surprise. Still towards the higher end of the trade estimates, 53.6 versus a 54 at the high end, and an average guess of 53. But with that acre reduction, what'd the balance sheet look like on beans?
I think the acre number was 3.5 million, right? And so there's a little bit of a, where's the other argument is where the other 1.5 million go. And there's that conversation I think people are having, but you already had a relatively tight carryout coming into this report.
Yeah.
I mean, we're already talking about a 300 million bushel carryout with a really good yield. And we just tightened it up another 20 million bushels today. And now we're 290 versus 310, I think, a month ago. With a very impressive yield, which could be realized.
Sure.
But again,
we need a little bit of weather left for the beans, for sure.
August and September rains are pretty important to finishing this one up. And I think it's when you look at it from that perspective, it just doesn't have the wiggle room for a problem. If U.S.-China does come a deal at some point, where do we fit them in the balance sheet? If we were to take the yield down a half a bushel, what's that do to the carry out? It gets pretty tight pretty quickly. And I think the bean, maybe going back to your question on corn not falling as much, maybe beans being higher today is something that also
keeping it in check a little bit.
Yeah.
Yeah. To see that type of supply on beans and that tightened carryout, given kind of the, looking back over the last couple months, we had a very positive RVO outlook. So we've kind of reignited our domestic crush demand, at least feels like through this new crop marketing and actually beyond with the RVO. And ultimately, we still had to account for a 12 million metric ton plus or minus bigger South American supply of SEP1. We've seen China buying very aggressively out of Brazil, but now their basis premiums are nearly $1 over the US. And whether they're 50% or 70% covered for October, there's still a window. It's gotten pushed back, but the dynamic of a 90-day extension on the tariffs, continued talks with China, feels like maybe there's still some potential buying to come into the mix. I'm not going to outguess it, but given the tightness now, sub 300 million bushel carryout, positive crush margins, it feels like the beans have a little bit of upside still, or at least potential there for opportunity for the producer.
Feels a bit like a powder keg, honestly. I mean, if you think about it, yesterday when Trump put out that tweet implying that China should buy U.S. beans.
Yeah. We have the most robust
soybeans, the U.S. farmer. But nonetheless, just that alone told you the market reacted to that kind of information that had nothing behind it.
Yeah.
It was just dying for something that was supportive, and we got it. Kind of. And then overnight we kind of broke, and then this morning we were lower. And then this report kind of just fanned the fire again, going, whoa, what if that happens and this continues? I mean, we're asking ourselves to produce a really big bean yield. I don't know what the record would be. Would this be a record?
You're right up there.
And this would, I mean, it's possible, but we're still not there yet.
I
Still
think
got to prove it.
I'd add one comment on the risk management side, Nate, that Mark made a great point on. He just amplified, is that yield side of the equation, is that 53.6 or 53.5 is a stout yield here for 24 or 25. And we certainly hope we can get there from a producer standpoint. But as Mark said, you trim that back a half bushel, all of a sudden that balance sheet gets even tighter.
They're not so robust
for 25, 26. So we'll see what happens in the next 30 to 45 days here. But it's another ingredient to that recipe for volatility in the market.
And we can get through with a 300 million bushel carryout. I mean, I do want to tame back maybe the bullish comment. I think risk management is still key for beans, but I think backing away from the flat price basis and spread opportunities on beans, it feels like this, along with that unknown on the trade deal, the RVO, probably time for the commercial step in a little bit on spread management. We've got pretty good carry, both corn and beans, but beans a little bit better. We're trading over 80% of full carry to the Jan.
And decent to the March.
Decent, yeah. Probably justifies getting a little bit more aggressive on spreads.
The tricky part is we don't own it. And so, you're kind of doing it against what you anticipate you're going to own. And so it's a little bit of a tough thing to handle. But nonetheless, the risk versus reward argument's very easy there. And I think that's where I think a lot of guys are starting to get where I need to protect this because of the unknown of these things that can impact us. And, you go back to the producer statement on corn, but I think the bean statement, it's the same thing. And, you're going to have to market something, and storage rates aren't going to be going down this year.
Right. The hard part is managing the fall, right? Even on the bean picture, what could be a pretty explosive basis environment just because of that carry and our domestic demand, especially if China comes in or we get an export book on kind of post-October. Those beans get put away, 300 million bushel, sub 3 million, 100 million bushel carry out, and the market's going to have to do a lot of work to pull those beans back out of storage. But it doesn't mean that there still couldn't be cheap values. I mean, we're 75 cents below delivery value for October. I mean, it's cheap.
And if you were to see a rally, I mean, what are you going to do to the South American farmer? You just build an incentive to plant soybeans this fall. So we're a little capped to some degree, but you just don't know what that story looks like going forward. But I would just, to Brian's point, is don't paint yourself into a corner. Give yourself flexibility. Be bullish. Sell your cash. Get long a call.
Yeah.
And hope this market runs and you're participating in it. You're not paying storage if you're a grower today.
If nothing else, the report gave us, I think, some revived volatility and opportunity, both downside risk and upside in this market, outside of all the trade rhetoric and everything else that's going on. It's a big crop. We knew it was a big crop. Now we got these numbers. Is it going to get bigger? Is it going to get smaller? Don't have to outguess it. Manage your flat price risk. Elevators, hopefully we can buy a decent amount of the crop this fall, take advantage of some of this carry, and come out of harvest full. I don't think that's going to be a problem for anybody. But buy basis and fall policies are going to be key on getting through this and protecting your balance sheet. Well, any other closing statements from you guys? Just a little bit of shock from the report, and we'll go on trading it. Appreciate everybody joining us. Next WASDE or next USDA report, September 12th, right? Join us again. Thanks.